Preparing for a Kuwait Finance House KFH interview questions and answers interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work at Kuwait Finance House? I'm interested in KFH because it combines large-scale banking with a clear Islamic finance identity. It is one of the region's leading Sharia-compliant institutions, so the role is not only about selling products or processing transactions. It is about offering ethical, asset-backed financial solutions. I would bring strong client focus, attention to risk, and willingness to learn KFH's products, especially Murabaha, Ijara, cards, deposits, and digital banking channels. While answering, focus on KFH's leadership in Islamic banking, ethical finance, regional scale, customer focus, and your fit with relationship management, operations, compliance, risk, or finance responsibilities. Question 2. How is Islamic banking different from conventional banking? The main difference is that Islamic banking avoids interest and structures financing around assets, trade, leasing, or risk sharing. In a conventional loan, the bank lends money and earns interest. In a Murabaha, for example, the bank buys an asset and sells it to the customer at a disclosed profit margin. The economics may look similar, but the contract form, ownership, risk transfer, and Sharia approval are critical to making it compliant. Make sure to cover prohibition of interest, asset-backed financing, risk sharing, trade-based contracts, Sharia governance, and why legal form and economic substance both matter in Islamic banking. Question 3. Explain Murabaha and the main risks KFH should control in a Murabaha transaction. Murabaha is a cost-plus sale, not a cash loan. The bank purchases an identified asset, takes ownership, then sells it to the customer at cost plus an agreed profit, usually payable over time. The key risks are proper asset ownership, valid documentation, customer credit risk, late payment handling, and avoiding any interest-like penalty income. In practice, I would check that approvals, invoices, asset description, promise to purchase, and payment schedule are complete. In your answer, talk about cost-plus sale mechanics, bank ownership before resale, disclosed profit margin, customer credit risk, documentation quality, late payment treatment, and Sharia compliance controls. Question 4. What is Ijara, and how would you explain it to a customer? Ijara is an Islamic lease where the bank owns an asset and leases its usufruct to the customer for rentals. The bank must bear ownership-related risks, while the customer bears usage-related responsibilities. If it is Ijara muntahiya bitamlik, ownership may transfer at the end through a separate sale or gift. For KFH, the practical focus is documentation, asset insurance, maintenance responsibility, rental schedule, and ensuring the contract does not become a disguised interest loan. Be sure to mention lease structure, ownership versus usage rights, rental payments, asset maintenance responsibilities, possible ownership transfer, and the importance of avoiding a disguised conventional interest loan. Question 5. How would you evaluate whether a retail or SME customer qualifies for Islamic financing? I would assess both willingness and ability to pay. For an individual, I would review salary stability, debt burden ratio, employer quality, account conduct, existing obligations, and credit bureau history. For an SME, I would add cash flow analysis, business model, receivable quality, bank statements, collateral, and owner reputation. Since KFH operates under Sharia structures, I would also ensure the financed purpose and underlying asset are permissible and clearly documented. While answering, focus on repayment capacity, credit history, income stability, cash flow quality, debt burden, collateral, account conduct, and confirming that the financed activity or asset is Sharia permissible. Question 6. How would you handle an angry customer complaining about a fee, delay, or rejected transaction? First, I would listen without interrupting and confirm the issue in simple terms. Then I would check the facts: transaction date, channel, product, fees, approvals, and service level timelines. If the bank made an error, I would own the correction and communicate the next step clearly. If the fee or decision is valid, I would explain it respectfully and offer alternatives. The goal is to protect trust, not just close the complaint. In your answer, emphasize active listening, fact-checking, empathy, policy knowledge, clear escalation, service-level timelines, protecting customer trust, and communicating decisions without blaming other teams. Question 7. Why are KYC and AML procedures critical in a bank like KFH? KYC and AML protect the bank from being used for money laundering, fraud, sanctions breaches, or terrorist financing. In a frontline role, I would verify identity, beneficial ownership, source of funds, customer purpose, expected account activity, and sanctions screening results. I would also monitor red flags, such as unusual cash movements or inconsistent transfers. For KFH, strong compliance supports regulatory trust and aligns with Islamic banking's ethical foundation. Make sure to cover identity verification, source of funds, beneficial ownership, sanctions screening, transaction monitoring, suspicious activity escalation, regulatory risk, reputational risk, and ethical alignment with Islamic finance. Question 8. How are Islamic financing products reflected in financial reporting under international financial reporting standards? I would start from the substance of the contract and the applicable international financial reporting standards guidance, while respecting its Sharia form. Murabaha receivables are generally measured based on the sale price and recognized over the financing period, with expected credit losses assessed under International Financial Reporting Standards 9. Ijara may require lease accounting analysis, depending on the bank's role and contract terms. The key is accurate classification, income recognition, impairment, and disclosure. Be sure to mention contract substance, Sharia form, income recognition, receivable measurement, lease assessment, International Financial Reporting Standards 9 expected credit losses, classification judgment, and transparent disclosure to users of financial statements. Question 9. What are Sukuk, and why are they important for an Islamic bank? Sukuk are Sharia-compliant investment certificates representing ownership in underlying assets, usufruct, or cash flows, rather than a pure debt claim. Investors earn returns linked to lease rentals, profit from trade, or project performance, depending on the structure. Compared with conventional bonds, Sukuk require asset linkage and Sharia approval. In a bank like KFH, Sukuk matter for liquidity management, investment portfolios, capital markets funding, and offering clients Islamic investment options. In your answer, talk about Sukuk as asset-linked certificates, difference from conventional bonds, investor return sources, Sharia approval, liquidity management, funding, investment portfolios, and client product offerings. Question 10. How does an Islamic bank manage profit rate risk and liquidity risk? Islamic banks still face rate-like market risk because customer pricing, benchmark rates, and funding costs move over time. The difference is that repricing must happen through Sharia-compliant contracts, not conventional interest mechanisms. Liquidity risk is also important because Islamic money market instruments can be less broad than conventional ones. I would manage this through asset liability matching, diversified deposits, high-quality liquid sukuk, stress testing, and close monitoring of maturity gaps. While answering, focus on benchmark movement, customer pricing, asset liability matching, maturity gaps, Sharia-compliant liquidity tools, sukuk portfolios, diversified deposits, stress testing, and limitations versus conventional money markets. Question 11. What role does digital banking play in KFH's customer strategy? Digital banking improves customer convenience, lowers service cost, and helps the bank compete with fintechs. If asked about KFH, I would emphasize secure mobile onboarding, instant transfers, card controls, digital financing journeys, and strong fraud monitoring. The challenge is balancing speed with compliance and customer education. My approach would be to simplify the customer journey, track service metrics, and escalate control issues quickly when digital behavior looks unusual. Make sure to cover customer convenience, cost efficiency, fintech competition, secure onboarding, fraud controls, mobile services, digital financing, compliance balance, service metrics, and customer education. Question 12. Tell me about a time you had to work quickly while maintaining accuracy. In banking, speed matters, but errors can create financial loss and regulatory issues. Under pressure, I prioritize by deadline, risk, and customer impact. I use checklists for documents, approvals, limits, and system entries, then perform a quick reasonableness review before submission. If I see a material issue, I escalate early rather than hide it. That approach helps me deliver quickly while protecting the bank's controls and reputation. In your answer, describe the pressure, prioritization method, checklist or control process, review steps, escalation behavior, outcome, and why accuracy is especially important in banking operations. Question 13. How would you cross-sell KFH products without damaging customer trust? Good cross-selling starts with suitability, not pushing products. I would first understand the customer's income, goals, family needs, risk appetite, and current relationship with the bank. Then I might suggest a savings account, card, Takaful-linked solution, financing product, or investment option if it genuinely fits. At KFH, I would also ensure the product is Sharia approved and explain transparently, including fees, profit rates, obligations, and potential risks. Be sure to mention suitability, customer needs analysis, transparent pricing, Sharia-approved products, risk explanation, long-term relationship value, avoiding aggressive selling, and matching products to financial goals. Question 14. What red flags would you look for when reviewing an SME customer's financial statements? I would look for trends that challenge repayment capacity. Red flags include falling gross margins, rising receivable days, heavy short-term borrowing, negative operating cash flow, high related party balances, inventory buildup, and frequent overdraft usage. I would compare statements with bank account activity and ask management to explain variances. Collateral helps, but cash flow repays the facility, so I would not rely only on security value. While answering, focus on repayment capacity, margin decline, working capital stress, receivable aging, negative cash flow, related party balances, overdraft dependency, inventory buildup, and reconciling statements to bank activity. Question 15. What would you do if you noticed a transaction might not be Sharia compliant after processing started? If I suspected Sharia non-compliance, I would not ignore it or try to fix it informally. I would document the facts, stop further processing if possible, and escalate to the line manager, compliance, and the Sharia governance function. The review would determine whether the contract needs correction, cancellation, customer communication, or purification of impermissible income. The key is transparency, timely escalation, and protecting both customer trust and KFH's Sharia credibility. Make sure to cover immediate escalation, documentation of facts, stopping further processing if possible, involving compliance and Sharia governance, remediation, customer communication, income purification, and protecting KFH's credibility. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.